Hi guys, thanks for tuning in to another episode of Nuggets News. Well, a huge week with Bitcoin and Libra consistently in the headlines. A bit of a mixed result for altcoins. We're going to go over all the macro news and the latest from the crypto world. I hope you've all had a great weekend. I enjoyed a weekend away at the snow with family. Great to get away from the screen. We do welcome 1,000 subscribers again this week, so plenty of new people flocking into crypto, and please recommend our free learning units and modules over at nuggetsnews.com.au to all those friends and family that are starting their crypto journey. So into the local news here, and unemployment rate held steady at 5.2%, but just 500 new jobs created in June. So we want more jobs than that. We want those high-paying, high-skilled jobs that Martin North and I often talk about, and we did our deep dive into the housing market and economy this week, so please check that out for more information if you haven't already. But in terms of APRA and the housing market, the regulator was under the microscope this week with this damning report into the failures to protect the public, consumers, and actually police the banks. So Wayne Byers is on 900 grand a year, but maybe hasn't been doing his job to the best of his ability. So it will be interesting to see what comes of this capability review going forward. We also got the results of some of the super funds, and something that we're noticing is good results across the board, around 7 or 8%. We need that to compound if any of us have got any hope to retire going forward. But the top 10, the top 20, what we're consistently seeing is the non-for-profits outperform the for-profit funds where people are paying managers to get them better returns. It's not actually the case. So that was certainly something that started my journey, wanting to do it all for myself. And for those of you that may be interested in setting up a self-managed super fund, our sponsor New Brighton Capital has a free consultation there. I know plenty of you have already enjoyed their service and putting a small percentage into Bitcoin for the long term. Speaking of that, Bitcoin is continuing to act as this uncorrelated safe haven asset class. So here we see a strong correlation to gold, US treasuries, and investment grade bonds, particularly in the past 6 months. And what that's telling us is that since central banks changed this narrative about where economies are going, Bitcoin is acting as somewhat of a safe haven. So I'm really looking forward to seeing if this does continue. I know I talk a lot about bonds and negative yields on the channel, so I will do a deep dive into how this world works this week, because I know you hear things like junk bonds and negative yields on junk bonds, and it is super confusing. So I look forward to that video coming soon. I want to head over to China and talk about their auto sales. So something that I report on this show every week. And for the first time in 14 years, it has dropped. So people cut back on new cars, even upgrading their second-hand cars and so on when times get tough, when you've got less disposable income. So when China slows down, they're responsible for 50% of the world's GDP growth since the GFC. So it is going to cause a lot of headwinds for Australia and the rest of the globe if their economy continues to cool off. Overnight banking rates in China are high, and that is because we saw that bank failure in May. But I think it is all this debt and debt in the shadow banking system. They know the economy's turning down, even though the numbers reported are still 6 or 7% nice and rosy. So those banks might know something that we don't. Over in Korea, and we did see rate cuts this week, but stocks actually went down as opposed to in the US when the Fed talks about cutting rates and QE, and stocks absolutely love it. So in other countries, it can be a sign that the economy is weakening, but I'm so interested to watch how this all does play out in the US, which we'll get to in just a second. Now, Deutsche Bank clients pulling out $1 billion a day. I'm not sure how long this can go on for. You guys know how fractional reserve banking works and all their derivatives. So if that money keeps getting sucked out, Deutsche Bank might be that straw that breaks the camel's back over in Europe there. Now, in the US, the Fed have hinted at returning to zero interest rate policy. So everything went soaring off the back of this news, and the US dollar went down. But the Fed are at 2.5%, telling us how great the economy is. Next thing you know, they're talking about going to zero again. So they sort of backflipped later in the week. But I think we all know where the truth lies. And investing legend Kyle Bass coming out and saying that we're never going away from zero. There's too much debt, privately, government debt. we're never going to see these high interest rates as long as these debt levels are around. So Ray Dalio is the other one that's been talking about this new paradigm. Look, he's telling people to buy gold and sell stocks. He thinks the best days are now behind us, so well worth a read. I know a lot of people want to get exposure to precious metals, so I did put together this how to invest in gold and silver beginner's guide about the miners, the ETFs, whether you should buy bullion and all that sort of thing. So please check that out if you haven't already. But what I want to talk about is the world's largest asset manager, BlackRock. The CEO coming out this week and saying he thinks that ECB will be the next to buy stocks. So we've seen it in Japan, the BOJ buying ETFs and stocks to keep the markets afloat. It's a different story, I think, if it happens in Europe, maybe in the US next, maybe even in Australia if things get bad enough. So when did it become normal for central banks to print money to buy stocks? And that makes the rich richer, leads to inequality. It is a crazy world that we live in when they're starting to put these tools as possibilities on the table. Now, this is all at a time when cryptocurrencies are becoming competition for all these sovereign currencies around the world. So the Fed's James Bullard did acknowledge that this week. It was one of my predictions last year that central banks could no longer choose to ignore cryptocurrencies, and it is coming true. And this is at a time when the G7 have approved Japan's cryptocurrency, an alternative to SWIFT, more people pulling away from the US dollar. We see plenty of these sort of payment companies, whether they're crypto related or not. Congrats to Ripple holders here. MoneyGram partnering with South Korea's Centbee, and this is used by Samsung Pay in Korea there. So maybe good news if you are an XRP holder. But there's so many of these sovereign currencies coming into play as well. So Iran announcing this gold-backed national cryptocurrency. We've seen India change their tune to say that, Bitcoin isn't banned in India, even though all these exchanges have had to shut up shop and leave. At the same time, we're hearing these stories that they're going to go along the same lines as China and maybe ban everything apart from their own currency, the digital rupee, when they can monitor everything happening on that blockchain. So interesting that that's happened in China or been proposed. And this week we see China declaring that Bitcoin is actually legal. It's virtual property. Some countries it's a commodity, others it's a currency. It is crazy that we're so far into Bitcoin's history and countries are still sort of deciding where this square peg fits in their round hole, so to speak. So I want to talk about the ECB again. Now, this is at a time when they're very fragile in terms of their monetary policy and leadership, coming out and saying that stablecoins are no cause for alarm. So they're not really fussed about stablecoins and crypto. At the same time, we see the German finance minister saying that Facebook shouldn't be allowed to compete with the euro. And I believe that that is the big competition. If Facebook do this global currency, it is going to be competition for all those different countries. And I'll talk about that more in just a second. But we are seeing a range of stablecoins. Binance have just launched another pound-back coin. So I certainly see these as massive competition, all these companies breaking in to the payment space and launching their own cryptocurrencies. Now, we saw that Senate hearing. There was 2 this week, and I watched all 9 hours worth for you guys in time and a half speed. But I have taken notes, and I'm going to give you a rundown on all the best bits and what you need to know, because this is super important, the results of this hearing and if Facebook coin does get launched there. Now, I want you guys to all follow Joe Kernan on Twitter. He is one of the only guys on CNBC actually in there batting for Bitcoin. And this conversation he had with Secretary Mnuchin about, cash gets used for all these illicit activities. And Mnuchin pushed back and said, no, I don't think so. And he's saying, so the existing system has never been used for all these activities, but you're trying to crack down on Bitcoin in case it's going to be used for these. It just doesn't make sense. What they're saying does not add up with what's playing out in the data, with what we see with Bitcoin's uses and all the banks being caught laundering money and so on. So when you do get that negative pushback, have your answers in mind. I got to debate Peter Switzer and that all went fairly well. We're going to have more of these critics going forward. Thanks to you guys that get behind me on Twitter so I can get on these guys' shows. Hopefully there's some more mainstream TV roles coming up so we can present the good arguments for Bitcoin rather than just all the bad things we continually hear in the mainstream media. But it's not all rosy, and Tether seems to always be in trouble with someone, and this time New York Attorney General again. You guys know my theory. I don't think that all these conspiracies are true. I know shareholders that have been getting paid out millions in dividends for years now. They're very profitable. I don't think they're insolvent, but if they've been serving US customers, they may get a slap on the wrist, which is similar to what we've seen with BitMEX. So careful what you wish for, as Nouriel Roubini has been debating Hayes, his first name escapes me, sorry guys, CEO of BitMEX, and now that he's in the spotlight and he's talking about all the fraud that's happening and BitMEX trading against their own customers, well, guess what? The regulators have come down on him. So he might have some answering to do as well, but they're out of the US jurisdiction. So that's the interesting thing about these cases, is how this plays out if customers were using VPNs and that sort of thing. Now, with all this crackdown that is being proposed by regulators, what they have to be careful of is not pushing innovation to other countries. And this is exactly what we've seen with Steve Wozniak, one of the co-founders of Apple, joining this energy-saving firm. So we don't know too much about this project just yet, but it's in Malta, and we know all the startups that are springing up in Southeast Asia. We've seen them personally move away from Australia or the US because of that regulation. So the industry, can't sit on their hands. They have to move if they want the startups to remain there. One of the industries I believe is going to be disrupted by blockchain is the healthcare industry. I've seen fax machines still being used in pharmacy to this day. So 1.7 billion by 2026 to be invested in global healthcare. I definitely believe that. It was one of the reasons I got excited about Project Cheval. It's been one of the worst performers, but they've had a few good partnerships recently, and they are launching their MVP this week. So pharmaceutical companies on board and researchers to access and use all that DNA data. You can get paid for agreeing to let them use your DNA in their research and so on. So really excited to see what this looks like this week. Now, another project I've been supporting of is ZeroX, and their latest release, Mesh, allows for the relays to communicate with each other. So at the moment, the relays aren't that connected. So as a trader, you should be getting a lot more liquidity, better order matching, that sort of thing when you use ZeroX or any platform that's built on top of and integrated with that ZeroX protocol. Another good news announcement from Nano this time, and the latest update has seen transactions confirmed in around 0.2 seconds. So Nano was one of those ones that had a lot of bugs. There was a lot of hype. It absolutely pumped. And now their latest upgrade, it seems to be working really well. So this is interesting for me in that I see, low fees and fast transactions as one thing, but are people going to hold this long term? Does it have that store of value aspect? Does it get more use case? They're the sort of things that I'm looking at with all these projects that are trying to do, the transfers faster or quicker, lower fees, that sort of thing. Now, a lot of privacy coins have been popping up lately. So Grin is about to execute their first hard fork. This is a planned hard fork. We know that these coins want to continue to upgrade, implementing Mimblewimble there. I know plenty of you have used Grin. Personally, I think there's a lot of competition in the privacy coin space, and Bitcoin and Ethereum might also adopt that of the base layer going forward. And this week we saw another hard fork. So Zcash, this is a friendly hard fork. It's been called into Ycash. Now, this is all around the debate whether the Zcash Foundation should continue to get a lot of rewards for the ongoing development. That's something that Ycash do want to ensure. So 5% of coins going to the Ycash Foundation. You need to pay devs. You need to continually progress your coin forward. Otherwise, it becomes less relevant in the space. Now, two projects that have partnered up, Neo and Ontology. So Neo's really been struggling for a while, and I think they've turned it around in recent weeks or months with a few of their Neo 3.0s and whatnot. So these projects were seen as stiff competition, some team members and founders jumping ship or on both teams. So eyeing off cross-chain, compatibility, that sort of thing that we talk about a lot. But I think people forget that Neo set out to build a digital assets platform, and Ontology is talking about its, decentralized identity framework. So there's plenty of scope for them to coexist, particularly in China with that huge market, and the larger cap coins there, I think have got the best chance of working with and staying on side with the government. Now, one thing that Binance have always done really well is staking if you're prepared to leave your coins on an exchange. So that obviously comes at a risk, but Binance announced that they didn't realize they'd been staking their Stellar, and they're going to be doing a massive airdrop. So around 10 to 12 months worth of Stellar for those people that keep their XLM tokens there over the next month. Now, at the time I saw this news broke, and I let our members know that, hey, I think this is going to cause Stellar that has a 1% annual yield to jump 12% because they're giving you 12 months worth in a 1 month period, so to speak. And sure enough, by the time you've logged in and tried to execute that trade, Binance has probably already jumped 12%. So you have to be quick. You've got to be logged in. It's more for the day traders when we see those little opportunities. So into the Ethereum news, and we know phase 0 spec has been frozen, and the team now talking about phase 1 being frozen in the next few months. So if you don't know what Ethereum 2.0 is, I have done a detailed video on that, the new chain that's being launched. Proof of stake is going to be there, so many new features, and this is rolling out maybe quicker than people first thought if we continue to get these 4 phases, the code all finished and those specs frozen. Now, Vitalik was in the news this week with a more controversial statement about Bitcoin Cash being a potential short-term solution for data availability. Now, we know that Ethereum has smaller blocks than Bitcoin. Just using very round numbers, let's call it a factor of 100, but they've got transactions every 10 seconds instead of 10 minutes. So either way, the throughput is still very low. We can't store things on the blockchain. So Bitcoin Cash, 32 megabyte blocks, maybe this is another option. Vitalik also floated Ethereum Classic. So they need, short-term solutions until we get all these scaling solutions implemented going forward. But he's always been friendly towards Bitcoin Cash, and this has certainly given the Bitcoin community plenty of fuel, those maximalists that hate Ethereum or hate Bitcoin Cash. Sometimes we see these projects randomly out of the blue come together and work together. Now, one thing that the Bitcoin community are also not going to like, and you guys know that I love Bitcoin, it's the king, but the maximalists do annoy me a little bit because I think there are other use cases and there's great projects out there. And what we're seeing is wrapped Bitcoin. So if wrapped means that we put Bitcoin into an ERC20 version, into a contract, and then we can use Bitcoin as we would with ERC20 tokens in smart contracts. So there's now $6 million of Bitcoin wrapped, and that is locked. Now, the Lightning Network has 9.7 million. So if this continues to grow at the current rate, in the next couple of weeks, we're going to have more Bitcoin in Ethereum second layer solutions than in Bitcoin second layer solutions. And that is going to cause a bit of a stir over on crypto Twitter, I imagine. One thing that I absolutely love is options and volatility. So I've spoken about these before, LedgerX and the different options they have available, and they've just listed a $100,000 call option with a December 2020 expiry. So if you're new to all this means is that people are now betting that Bitcoin is going to be over 100,000 by December 2020, and what they're willing to pay tells us the odds of how likely that is to happen. Now, if you want more information, I have done a couple of learning units in our premium section about options, why they're important, how they are coming to the crypto space, and how you can use them to your advantage, both buying and selling them to make a little bit of money. The final bit of news I wanted to touch on here was about Bakkt, set to launch on Monday. Now, I believe this is just practice testing and so on. They may be holding a big event this Thursday as well. So are these the sort of things that can turn sentiment around? Everyone loves Bakkt. They're anticipating it. I think this announcement's been forgotten about somewhat. So maybe this could be the catalyst if we are going to have a green week when we see plenty of people talking about Bakkt again. And we've seen those other Bitcoin type products being approved lately, so who knows? Grayscale Investments put out a report every quarter, and one thing that I found super interesting I wanted to share with you guys here was the amount that's gone into altcoins. So in Q1, we had 99% going into Bitcoin. Now that's dropped quite significantly, so a quarter of the money coming in has been into altcoins. Now we know that smart money is ahead of the curve. And at the moment, I think altcoins are just, people are despising them. They think they're dead. They are making new lows versus Bitcoin. And that's the sort of time where I start to get interested. And I'll talk about that a little bit more when we get to the technical analysis. Now, this week has been pretty volatile, but there have been some fantastic trading opportunities. And I've done a 2-part series on my personal favorite trading strategy using the RSI and how I implement that on different timeframes. And a great example of that played out this week. So this is the daily time frame. Here is the flag that we had drawn last week, and I said at 11,250 that if we lose this 11,000 level, it doesn't look good, and weakness could continue to around the 20th of July here when our next cycle bracket is now pushing up. So we lost that level. We did lose the trend, we lost the moving averages, a number of things, and that ended up with a couple of big red days. Now, we've since clawed our way higher, but that volume is declining there. So it's not the healthiest rise, but if we can regain those moving averages, that's the first step in the right direction. I spoke about the longs as well, and when we have those breakdowns with so many leverage longs, this is what causes that sharp squeeze to the downside that we did see. So, there's still other trends in play here. Longer term, it's all still looking great. Let's just have a look at the weekly chart quickly. We did touch that moving average perfectly, so there are buyers watching these and waiting to step in. A few people have been asking me to look at the 3-day. Again, that's pulled into those moving averages very nicely, and we're about to get this golden cross on the 3-day, which a lot of people are viewing as another bullish catalyst. But I do want to take a quick look at Ethereum because that got absolutely beat up this week. We've gone from over 300 to touching below 200 there fairly quickly. So if we have a look at this weekly chart, we did kiss this trend line that we have been forming, and we did close within those moving averages again. Buyers are stepping in, and we did tag the 50-week moving average. So there's plenty of positives there. But last week on the ETH BTC pair, I spoke about, if we break down, it's not going to be pretty if Ethereum makes new lows on this chart. And we did get that breakdown there, another 10% or so. So this is where people are now starting to say, am I going to speculate on the bottom and Ethereum outperforming Bitcoin in the coming days or weeks? That tends to lead that alt season. So this is something that you want to watch super closely. We're now oversold on the weekly RSI. That doesn't happen too often, and it's at least led to a bit of a bounce for a couple of weeks on previous occasions there as well. The final one I'll look at is Litecoin on the daily chart. Now, Litecoin is just a few weeks away from that halving, so it was one of the more aggressive bounces, around 40% off those lows. So are the whales going to push this up heading into that halving and get people's sentiment really excited, even more so building for the Bitcoin halving going forward? So I think that, yes, we are going to see Litecoin attempt one more gasp higher before that halving date in the coming weeks. But in the immediate future, guys, we have to be mindful that it is a downtrend in Bitcoin for now. While we have seen buyers step in, we had that tremendous run. And one of the reasons I think we're seeing volatility is because the huge percentage gains, if you've got in anywhere down here, but at the same time, on all these pullbacks, we've got a lot of people that miss the boat, and every dip is being pretty aggressively bought. So if we do roll over and we do drift lower, our next key date is the 6th of August. I think there's going to be plenty of buyers wanting to step in. We've seen sentiment get so bad so quickly and then flip. So it's an emotional market with a lot of people having their own agendas and wanting to push the market down to buy more Bitcoin and so on. So I hope you guys have enjoyed that. I hope a few of you did make that great trade on the 4-hour, which was that oversold bounce play that turned into a fantastic swing trade. If you got that on leverage, it's been an absolute month or even year maker. So if you want to learn more about all that, guys, head over to nuggetsnews.com.au, join our premium area, and I'll talk to you guys again soon. Cheers.